Hello everyone, welcome to the channel. Now, investing has changed my life. Today, I'm going to give you 6 reasons on why you should start investing now. Reason number 1, compound interest. Now, the compound interest is the number 1 reason why you should start investing now. It is so powerful that Albert Einstein called it the most powerful force in the universe. Just think about that. Most people believe Warren Buffett owes his success to his investment skills, but the true, often overlooked reason behind his success is actually compounding interest. And we'll have a closer look at that a little bit later. So what is compound interest? Now, imagine you have a savings account. With compound interest, you get interest on your principal, which is the money you put in, obviously, but you also earn interest on all the interest you earned previously. So your money grows like a rolling snowball, if you will. It may start small from the beginning, but it gets bigger and bigger. And here's the thing, the earlier you start, the quicker and bigger it grows at the end. So the growth curve will be like this. It may seem slow and not much progress at the beginning, but the growth really happens at an accelerated rate when you reach the inflection point. And that's where you see the real impact. I just love this curve. Besides investing, it also describes so many other things in the world, but that's a topic for another day. Now, compounding interest applies to all kinds of investments, not just a simple savings account. For example, if you are doing share investing, you can reinvest the dividend that you received to buy more shares. If you invested in a company that chooses not to pay a dividend, compounding interest still happens because the company management has reinvested the profit on your behalf to grow the business, and this will eventually lead to a higher share price. Remember, the amount of time you have is critical to compounding interest, and this is the reason why you should start investing now. Warren Buffett's net worth is around 85 billion. We know that he started investing at the age of 10, and by the age of 30, his net worth was around 93 million, which is around 1 million adjusted for inflation. Now, he's 92 years old now, and he still practices investing to this day. What would his net worth be if he started investing at the age of 30 instead of 10? And just retire at 60? The answer is 12 million. 12 million is still a lot of money, but that is 99% less than his actual net worth. 99%, and that's the power of compounding interest. This means his financial success is tied to the solid base he built in his early years and the longevity he maintained in his later years. He's good at investing, but his secret is time. Reason number 2, make money work for you. Investing transforms the relationship between you and money. This is such a fundamental shift, and that can be sometimes life-changing. The number 1 skill most of us learn going through our education system is how to trade time for money. There's nothing wrong with that. We have to start from somewhere. But if you're working for money, your money grows linearly. You put more hours and then you get paid more, but you don't have much freedom. And if you stop putting in the hours, your money stop coming in as well. In school, we might study finance and economics, but we're never being taught on how to manage our own money and get wealthy. Because these kind of skills are really soft skills rather than hard science. This is one of the reasons why some well-educated people are really bad with their own money. When you are investing, you are shifting the dynamics and you are making money works for you. What you learn about money and finance are going to be very practical and relevant. You'll be surprised to find out sometimes what they taught in school can be misleading and make it harder for people to build wealth. Number 3, there's no reason why you can't start. I think the biggest reason why people choose not to invest is because they are scared of it. They think investment is risky, time-consuming, or they think they just don't have the money and skills to do it. Those thoughts are not untrue sometimes. Investing can be risky, time-consuming, and expensive in some cases. But there are also easy, low-effort ways to invest, and you can start today with the amount of money you feel comfortable with. One of the best and easiest way to invest is dollar cost averaging. You set aside, for example, like $200 a month, and you buy on schedule regardless of what the market is like. You can buy individual stock, or even simpler, you can buy ETFs that tracks the market indices such as the S&P 500 or the Nasdaq 100. This is almost putting investing on autopilot. You minimize your risk because your buys are spread out across periods, not just at one point. Not only that, with ETF, you're buying a basket of stocks from a range of companies, not just one. So if one company goes under, you still have your investments in other companies in the basket. Then with ETF, most of the research is already done for you because indices such as the S&P 500 include the top 500 companies by market cap. So if a company falls behind, that company gets removed from the basket automatically. So you only end up having the shares in the top performing companies only. And this all happens behind the scenes with not much actions required from you. Most brokers nowadays offers fractional trading, so you don't even need to buy the whole share. For example, if the ticker price is $200 per share, you spend $100 and just buy half a share. Or you can spend $10 to buy 0.2 share and just to build investment from there. The world of investing is the big matrix. You're almost guaranteed to find something that works for you. So all you need to do is to take action and make a start. Reason number 4, investing makes me to be a more capable person. Now, I used to spend all my time online watching talk shows and movies. I mean, all the YouTube channel I watch, people or topics that I follow on social media are pretty much all about entertainment and lifestyle. And I often felt very much isolated and disconnected from what's happening around the world. Well, investing has changed that for me. I started paying more attention as my investment grew. Today, there's very much a variety in the digital content I consume. I mean, I have a few finance YouTube channels that I watch on a daily basis, and all my Twitter followings are all finance related. Then naturally, I develop an interest in other areas such as politics because they impact the market on a day-to-day basis. I read some books about history, psychology, personal development, and all because these topics are somewhat connected to investing. And during the process, I got better at critical thinking because I hear different views and opinions about the same thing every day. I mean, people are going to either be bullish, bearish, or neutral about the market, and they will never 100% agree. There's just so much information out there. It requires me to hone my skills to tell what is helpful and what is not. And this all happens so naturally. There's no late nights, no exams, and I didn't block a day just to do this. And plus, I feel what I learned is so much more relevant and actually made a difference to my day-to-day life. Reason number 5, investing is your inflation hedge. So the best way to think about this is that things get more expensive over time, but the nominal value of your money stays constant. Like if you have $10,000 in cash in 2013, and then you put that cash in a drawer and leave it there for 10 years. Now, fast forward to 2023, 10 years later, that $10,000 cash is still going to be the same when you open that drawer. But here's a catch. Things have become more expensive during the 10-year period. So with the same $10,000, you can no longer buy the same amount of stuff. So investing your money helps you to protect your purchase power of your money. This is because markets factor in inflation when it works out the asset prices. So if you invest that $10,000 in 2013 in the stock market, for example, an ETF tracking the S&P 500, you will more likely get more money when you cash out your investment in 2023 because the stock market has gone up. So a good investment can grow our money at least alongside, hopefully faster, with the price increases of the goods and services that we consume every day. That is inflation hedge. Now, reason number 6, investing gives you additional tax benefits. You may come across a narrative that people or corporations who owns 99% of the wealth in the country only pays 1% of the tax. This is real because investments get special and often favorable tax treatment. The tax benefits are often justified by the risk investors take on, and a lot of governments also want to provide policy incentives to attract new investments because that's good for the economy. But you don't have to be a millionaire or billionaire to enjoy those tax benefits. Even if you're just starting out, your investments get treated equally for tax purposes. For example, investment property owners can claim depreciation expenses in their tax return. Let's say your marginal tax rate is 37%. Now, you will get a $3,700 additional tax refund from the tax office if you claim $10,000 depreciation expenses in your tax return. Unlike other deductions, property depreciation is a non-cash expense, meaning that you don't actually need to spend money. So the $3,700 you get is like a purely icing on the cake in addition to the normal refund that you would have gotten from the tax office. There are so many other tax concessions available. For example, in Australia, certain types of capital gains are eligible for a 50% discount, meaning investors only need to pay tax on half of the capital gain. Investors can also set up business structures, such as a family trust or corporation, to take advantage of those additional tax benefits that are unique to those business structure. I know about this because I work in tax and I see the tax benefit of investing every day. Okay, there you have it. 5 reasons why you should start investing now. I'm curious to know, are you persuaded after watching this video? If you already are an investor, what are the reasons for investing for you? Let me know in the comments below. Okay, thanks for watching. I'll see you next time.